but the big talking point besides the Nifty has also been the rupee, which is trading at 3-month highs. Agam Gupta, the MD, Head of Foreign Exchange, Rates and Credit Trading, South Asia, joins in from StanChart. Hi Agam, good to see you in this morning. It's a 3-month high for the rupee, but do you expect that there could be some amount of trepidation coming in from the RBI considering the sudden appreciation that we've seen, or would it be a positive?
I think what we have to take note of the fact is that the appreciation is happening due to some real capital inflows, and it's not on account of any speculation. So I'm sure RBI would have no problem with it. It's still within a range. It's not breaking out on and running away on either side. I think a section of the market is a bit surprised by the speed and the extent of the down move on the USD INR, but it's basically happened because there are some capital inflows lined up for the month of March, and they've started coming in.
Okay. Hi Agam, good afternoon. Just in the immediate term, the breach of which crucial level will result in a further up move, a further strength in the rupee? So just technically, if you could take us through in the near term the key levels.
Yeah, I think the first key level is 61.25, and beyond that it's 60.75. So this entire zone of 60.75 to 61 quarter is a crucial support level. I think in the run up to March end, these levels could be tested, but I would expect that there would be reasonable amount of demand at these levels, and probably they would not break in a hurry.
How did traders react to the current account deficit data that came out last evening? We had a surplus in the balance of payments as well. Did that affect sentiment more, or is it more about capital flows that we have seen besides the current account deficit data that came out?
The data was definitely on the positive side, but if you're talking specifically about the move today, it's more getting driven by the fact that there are actual capital inflows hitting the market, rather than people selling because the data was good. So it's more to do with the fact that we are seeing actual capital inflows today in the market.
Agam, speaking about capital levels, you also said that a lot more is expected in the month of March. Could you tell us what perhaps will be the quantum of capital inflows that you all are watching out for, which could be expected in the coming few weeks?
I think if you just add up some big ticket deals which have been reported in the press in the recent past, close to $2.5 to $3 billion are expected to come in. It's very difficult to say when they come in exactly, but the broad expectation is that they would probably hit the market in the month of March, and maybe some of it is already coming in.
Agam, the other viewpoint amongst a couple of people looking at the rupee is that once the elections come up, the rupee could be quite volatile or within that certain period. Is that what StanChart is also estimating, that maybe there could be a period of volatility headed for the rupee once polling starts, and maybe once towards the election outcome?
Well, the election dates have just been announced, and I don't see any reason why the market will become volatile when polling starts. I guess as we come closer to the end of the polling, the people would there would be some volatility in the market, some choppiness in the market. But currently, it looks like that there are still some inflows which are lined up, and probably will continue till for the next month or so. And once people have positioned themselves, I think the market is positioning itself for basically a sort of a stable government coming in at the center. So once that is priced in, then it will depend on what actually happens when the results are announced. So there would be some volatility, some choppiness, but I don't expect it to be extreme in nature. I mean, and we have RBI who's got enough reserves to control it. So don't expect any extreme volatility in the run up to the election results.
The capital inflows that we're expecting in March, does it have the strength in itself to breach the key support level that you were watching out for, levels of 60.75 to 61.25? Can that in itself have the strength to break us past this key support level and move higher, make the rupee move higher?
I think there will be consistent demand from the nationalized banks on two accounts. One would be for some residual demand from the fact that the oil companies still have small amounts left to cover for the oil swaps which are maturing in the next month or so, which they have to pay back to the RBI. And probably after that, there is a chance that RBI could buy some dollars to shore up its reserves, either in the spot or the forward buckets, because we have had statements from the authorities in the past, specifically from the FinMin, saying that they are looking to increase reserves by $15 billion by the end of the month, by the end of the financial year, which is effectively by the end of the month. So if you add 2 and 2 together, I think that there would be demand from either the oil companies or the RBI around 61 levels, and these flows will get absorbed by that.
Okay. Agam, I just wanted your view on the bonds as well. In terms of the F5 or rather FY15 borrowing program, there were reports indicating that 60% of the borrowing program will be done in the first half of the fiscal. Is there going to be some amount of supply pressure that maybe the bond markets will start reacting to come April 1st?
I think that's a pretty normal thing, that we have the borrowing program, it's always front-loaded. So that's normal. Also, there are pretty big redemptions in the month of April and May. So it's definitely not a surprise that 60% of the borrowing is in the first half of the new fiscal. Obviously, when the supply starts hitting in April, the market will probably react a bit to it. But the fact is that the 60% number is not a surprise at all. It's totally on par with expectations.
Okay, Agam, I just had a quick follow-up question on that. In terms of what you've seen possibly in 2009 or maybe other elections while you were working, have you seen any significant change which has taken place in the borrowing program once the new government has come in, and hence maybe there could be a reaction on the bond markets on account of that as well?
Well, I mean, it's too early to comment on that. We have to see what the new government looks like. If it's going to be a stable, strong government at the center, then I'm sure they're going to take cognizance of the fact that, you know, what the market is expecting. They're going to take cognizance of the fact that the fiscal deficit is something which everybody is watching. So it's probably not going to be a concern if it's going to be a stable government at the center. If you have a sort of a ragtag coalition coming in at the center, then there could be a bit of concern.
Agam, just one last question. The rupee so far has shown, fair amount of resilience to all the developments which have taken place in Ukraine, Russia, though that, the tensions from there as well have eased. Do you think just going maybe in the next 1 month or so, where we have domestic cues like expected capital inflows, Indian markets, the Indian currency could be quite insulated from the developments which take place perhaps in the peripheral emerging markets or maybe even in the likes of Ukraine and Russia?
Well, I mean, the Indian rupee will definitely react a bit to the events in the global markets. If there is an emerging market sell-off, then you will probably see the rupee weaken in tandem. But I think what is clear is that the extent of the sell-off, if it happens, will be much lesser in the INR than it would be in other currencies, because the fundamentals of the currency have really improved in the last 3 to 6 months, both on the current account and on the capital account. So rupee will react with other currencies, but definitely not to the same extent. That's my view.
Okay, Agam, we leave it at that. Thank you very much for joining.